My name is Shane Williams. I'm CEO of a company called West Red Lake Gold Mines, and we're putting the Madsen mine back into production currently.
And Alex Black, Executive Chair of Rio2, currently in construction at our Fenix gold mine in Chile, and lots of action and activity going on there.
Gentlemen, I couldn't be more pleased to have both of you on here. So Shane and Alex, we're going to talk today about building mines, because you're both in that process of doing that. There's and the trials and tribulations, some I do mean that. It's hard, but there's a kind of reality to doing it, and very few people have done it, and very few people can claim to be able to do it, although a lot try. So today we're going to learn a little bit about your own projects, but also more importantly, sort of stepping back, be able to kind of learn a thing or two, which will help investors challenge some of the investments challenge the management teams of some of the investments that they've made. Okay, so we'll dip in and out of your own projects and a bit more generic. So, like Shane, I'm going to start with you, which is with regards to your own Madsen mine. What are the kind of geological assumptions that underpin the updated mine model for Madsen for you?
Yeah, for us, look, a lot of the challenges of the previous operator was around the lack of drilling. You know, really understanding geological understanding. We've done over 150,000 meters of drilling now. So a lot of drilling has gone into understanding that ore body. So there's been a huge amount of, and this is 6 meter spacing drilling. We're not talking about wide spacing drilling. This is 6 meter spacing. This is very, very detailed fan drilling from underground. So that's been the bulk of our de-risking over the last 18 months, as we've talked, Matt, a number of times. Really underground development in underground and getting into those areas for that very, very tight space drilling. And that's given us much better confidence. At the end of the day, all mines start with a resource and an ore body, and you've got to get that right before you move forward. And that's where we've kind of refocused once we've taken over the project, and really start from basics again.
Okay, so Shane, just sticking with Shane on that one, just talk about the kind of integration of that new drill data into the kind of resource model on a kind of rolling basis, you know, so for, like turnaround time from core to updated stope design, that sort of stuff.
Yeah, okay, so normally what we're running is you run like a long term and a medium term and a short term model for building a project. So your long-term model is like your life of mine MRE sort of model, resource model, you know, that the consultants sign off on, and it's you use for your pre-feasibility studies, etc. And then what you do is, with our very, very fine drilling, we're converting that into a medium-term model, which we're bringing down to the next level of detail. And that's the one we hand over to the engineers and do the mine design and the details and mine design and stope design. And then that allows us to start the underground development, where we're going to access, where we're going to get those stopes. But all the time we're sampling all the time as we go, Matthew. So as we're driving those drifts, as we're moving through, we're taking face samples, we're taking chip samples, we're sampling constantly. And them samples are feeding into the short-term model, which is the next level of model. So there's really 3 levels of data that's being developed all the way down. So not only, I talk about these 6 to 8 meters drilling for a long time, but geologists are down on the ground as they're drilling and blasting the faces, taking chip samples and data and face mapping, and that's going back into the model as we go. So there's a huge amount of data driven. The mine we're developing it's not a visual mine, so it's not visually, you can't visually follow the gold. It's more data driven, basically. So it needs a lot of data. So that's really the difference between the long-term model, the medium-term model, and the short-term model. And underground mines, you need this level of detail to be successful in these narrow vein, high-grade mines.
Right, okay, and we're going to get into a lot of that today, because Alex, Fenix, it couldn't be more different. So this is a kind of large, lower-grade, open pit project. So let's start with, like, how did you optimize the kind of pit shell and the phase sequencing, I guess, to kind of maximize cash flow and minimize stripping?
Well, it's a completely different process, isn't it? I mean, I started off in the mining industry working underground in Kalgoorlie back in the 80s. So I do have underground experience, and just listening to what Shane was saying about a non-visual ore body, I mean, that has got to be a pretty significant challenge, and you've got to be right on top of your game to mine that. So I take my hat off to you, Shane, in that respect. Yeah, look, I mean, we've got a massive 400 million ton ore body sitting at the top of a hill. Obviously, there are computer algorithms that do Lurch-Grossman pit optimization. You plug in your costs and your metal prices, and you come up with your ultimate pits. But in our situation, yeah, it's completely different to what Shane is dealing with. Yeah, the amount of data that we deal with, as opposed to the amount of data that Shane is dealing with on a regular basis, is pretty interesting. I mean, we do, and just going back to what Shane was saying, start off with a resource model, which is obviously the basis for everything, and then what we're doing right now is we're doing grade control drilling. So we're going to the parts of the pits that represent the next 3 years of production, and we're doing closer space drilling just to confirm the resource model, to see if there's any surprises, pluses or minuses in respect to the way we modelled the deposit. And then that sets us up for mining. And then during mining, we'll be sampling blast holes as we drill and blast the floor of the pit as we go down, and that model will be used. So there's a reconciliation process between the resource model, the grade control model, and the mining model. And that's done on a regular basis. That's not just us. All open pit mines around the world do that. And you reconcile and try and work out how things are going as to how you initially interpreted the
And the process is the same, really, Matthew, from both areas. It's just the level of that data. That's really, the conversion from resource to reserve. Their grade control drilling is like our face mapping and face sampling, etc. Just feeds into the model. It's just we're at the level where we're doing, just to give you a scale, every bucket of ore we move, we sample. You know what I mean? You're talking about every bucket of ore you underground. They take chips from the sample face. We have a swarm of, I'd call them production geologists. They're like gophers underground, running around constantly taking samples as we go, as the miners are going. They go off, they get asset, they come back. So ours is really a data management exercise, effectively. It's just the amount of data is just unbelievable, the amount of data,
I guess there's some similarities in the sense that, I mean, for you, Alex, this is an earth moving exercise, because the kind of the grade thing. This is getting the efficiencies around earth moving. And obviously, you've got Shane talking about the kind of detail that he requires just to be able to work out where to drill and where to mine. I mean, talk to me about the kind of those efficiencies that you look for from your team
in the open pit side.
Yeah.
You've got a grade that you're mining to, right? So in Shane's case, I think your head grade is about 8 grams a tonne.
8 grams, yeah, about 8 grams a tonne.
And what Shane's got to do is got to maintain that grade and obviously the tonnes to go through the mill as he's proposing, right? So we've got a very similar requirement that we've got grade as well, even though it's much lower. And in our case, the average grade is about 0.5 gram. And obviously we've got to move that material from the pit to the leach pad, and do that on a very systematic basis, and obviously leach the material as it's going onto the pad to maintain our production, right? Once we get to production. Shane's already producing at the moment. Shane, I just want to stop you there before we keep going with this presentation, and I just want to show everybody that there was a photo that you posted on Twitter just recently, and you asked a question. You said, how many ounces in that bar? And there's a nice juicy gold bar there. Looks pretty heavy. My guess was 900 ounces, and there were a raft of people that put their number down, but there's no answer. So what's going on?
Yeah, so there is an answer. I'm still getting inputs from people on Twitter, so I'm letting it go a little bit longer. All will be revealed, I hope, next week, early next week.
What's the prize? That's what I want to know. What's the prize? You didn't offer
I
anything.
won't, I won't, I won't be giving away the gold bar for sure. That's for sure. At today's prices, no, for sure.
Well, I'm looking
Right.
forward to it.
Look, and guys, look, I think this is a really good point. Look, there'll be people who are not invested in either of you watching this, and there'll be your, shareholders in one company and not the other. So let's just sort of remind people what does it look like when you get into production in terms of that first year and that kind of in terms of that ramp up, and then what's the kind of steady state for both of you? Because it's pretty similar. I mean, Alex, why don't you go with that?
Well, Shane, you might start there because you're holding a bar. I'm not holding anything right now. You're in ramp up, right?
Yeah. I mean, our project is a little bit different in that, you're a development project. We have a mine that's already there effectively. So, the challenges that, I've done a lot of early stage development, or you're in construction, you have a construction period. We actually have an operating mine. I have 300 people on site at the moment as we speak, and we're moving forward. So we've started that process. As I said, we've produced gold bars. We're doing this thing we call a bulk sample, which I've talked to Matt a little bit, where we're going to test, a number of these areas and stopes and do a full reconciliation against the model and area. So just because of the history of the mine, where there was a lot of issues with reconciliation, we've done this process. So that goal is from that process effectively. It's pretty much done now. It's done. I'm on site this week. It'll be finished this week. And then we'll be able to hopefully announce those results in early May. Actually, Matthew, we'll be announcing those results in early May. And so from there, we will then do our official ramp up, really start the mine. But our mine is a small mine. Look, it's 800 tons a day sort of a mine. It's quite a small, the difference between the open pits are scale, big tonnage is scale. Undergrounds are more about selectivity and focusing on grade and, getting it right, getting the ore. So that's kind of the difference. But we're going to ramp up slowly. These ramp ups usually take 3 to 6 months sort of ramp up. You need to do these right. A lot of people think that you can turn on the mine and away you go. It never works like that. It takes some time. You got to ramp it up. You got to test everything. And also it's about getting the people right. Like sometimes the people who build the mine are not the people who should run the mine. It's been my history that neither the two work together at the right phase. They need to be different groups. And so, building that operational readiness team, getting them right, ramping up the people, that does take time. And I think a lot of people forget about that. We've talked about this, Matt, a few times, that people forget about the stage of the project and having the right group for the right stage of the project. And that's critical as you move from even early exploration to studies, from studies to construction, and construction to operations. There's a different skill set needed at every time.
Just Shane, if I may, Alex, Shane, so give us a number. What you given guidance to market? You're going to start slow and kind of build up. Remind us in this interview what that number is.
So at full production, we're producing around 65 to 70,000 ounces a year. Quite small amount, and we're starting. This year we're starting at ramp up around 800 tons a day, but we'll only this year produce somewhere between 20 to 40,000 ounces at half runway, and then full production next year in 2026.
Right, Alex, and over to you. I mean, describe where you're at and what your guidance you're offering.
Yeah, we've got a ramp up at Fenix Gold next year. We're anticipating first gold in January. That's our current guidance. And we're on track to do that. We're going to put out a press release hopefully next week about our performance during Q1 and how we're going and tracking. So yeah, and so we're mining the peaks of an extinct volcano, which are quite pointy. If anybody has seen the photos and the videos on our website. So what you've got to do is you've got to slowly bring those peaks down and start to make a work area for yourselves. And so that takes time. So our first year of production, and we haven't officially guided on this yet, but it's likely to be around 70,000 ounces for 2026. And then by the time we get to the end of 2026, we're at a rate of about 100,000 ounces, and that's what we'll probably do for 2027. So that's our run rate for the starter project at that level. And I guess for the people that are watching this, the difference between what Shane's doing and what Rio2's doing is that, the capital intensity is completely different. And the advantage that Shane has is $350 million of plant and infrastructure was spent by somebody else who went bust. And he inherited that, which is great because it was all in brand new condition when you inherited that. In our case, we're building a mine, the starter project, let's call the capex about $150 million. So 350 versus 150. Then Shane's put in probably about 140, $150 million since they took ownership. And because of all the intensive work that they're doing to, validate and justify the model, etc., there's a lot of investment there. We haven't invested that same amount of money. So, there's swings and roundabouts in the differential between our types of projects. People just need to realize that. The good thing is what Shane has, from what I see, is grade, right? So 8 to 9 grams is a good number. There's been too many mines that have got off the ground, underground mines, 3.5, 4 grams. That to me is really scary. And I think it'd probably be pretty scary for Shane as well, particularly if you run into problems. But, having that grade is going to help. And look at the premier underground gold mine in the world, Fruta del Norte, Lundin Gold. What a fantastic, but that's, huge widths, grades in excess of 10 grams, and a lot of it, so they've got what everybody would wish for from an underground perspective at Lundin Gold.
Right, and so I guess what I'm trying to show is in terms of output, you're sort of guiding the same sorts of numbers in terms of ounces produced, right? But you couldn't be more different. Your sisters in a way, but you've got very different look and feel about you.
Shane's going to move 800 tons a day to the plant, and we're going to move 20,000 tons a day to that. Right, so
there we go.
There's the difference, and that's what it's down to.
Yeah. So it's a very, very, very different sort of setup in terms of the ore body, very different setup in terms of the build, but also the operations for sure. And look, and I love it if you guys want to sort of challenge each other, ask each other questions across the board. That'd be great. And I think I want to kind of step back and sort of maybe pick your brains a little bit, because here's the problem I have. We get lots of companies coming on here and making lots of wonderful claims about how their development's going to, get into production. And we've all three of us talked in the past that not all projects, not all management teams are built the same, and definitely not as advertised. They won't all make it across the line easily. So, Shane, if I look back in your history, your time in this space, when you've seen a thing or two, when you're sort of looking around the market now, what are the kind of main challenges for building that management teams are underestimating, and maybe even investors looking in are underestimating at the moment? What's the big problem out there people don't realize?
So I see a big problem with like we talked about, experienced people. I'm a different age group than Alex for sure, and so there's very few young people in the industry coming in who has that project experience. As you both know, the last 10 years, 15 years, the industry's been pretty down from the last big boom, which was in 10, 11, 12. And since that period, there hasn't been a lot done. And so people left the industry. So people who have that experience of building companies and building operations, it takes 10 years, by the time you build a real company. And the big project builders and company builders of all, the Ross Beatties, the Robert Friedel, they're not going to be there for this cycle. And so where you get those people with experience, and a lot of people claim to be builders and they've worked for a consultant for 7 years, and they've worked on 15 different projects, but that's not, it's the ownership and taking it from A to B and the challenges of a team. That's hard to find today. I find it anyway. It's hard to find, and when you find a team like that, you got to hold on to them. And there's not a lot of those people out there for sure. You know.
Yeah,
What about you, Alex?
yeah, I think you're spot on, Shane. It all comes down to people, and there has been a brain drain in the mining sector over the last 20 years. How old are you anyway?
So I'm in my late 40s.
Okay, late 40s. I'm in my late 60s. So we're 20 years difference. But yeah, look, unfortunately, there has been a drain. One of our strategies has always been, and obviously our track record, and I won't go through this in great detail, but we built two similar mines in Peru over the last 15 years, La Reina and Shahuindo, when we were Rio2. And one of our philosophies when we built that project was to employ good, enthusiastic, and capable young people, right, into our team. And we're doing the same in Chile, right? Chile has been dominated by big companies, a lot of grey-haired guys there, but we look to recruit the young guys, the 30s to 40s, that we can put into our teams and that can grow with the project. And we give them the responsibility and the initiative, or we promote initiative to take the project forward. Things that they wouldn't get if they were working for Rio Tinto, BHP, or Codelco, or whoever else in Chile. So that's our strategy, and by doing that, we're actually training those people as well. I mean, they are, from the industry, but doing a relatively small scale heap leach project, and in gold, which is not common in Chile, the gold industry in Chile is quite tiny, is interesting. So we are teaching these guys how to run a lean and mean, because that's the way a junior company needs to run, a lean and mean business, and be profitable at it. Now, next year we'll see how we go and how successful we've been at it. It's people. Unfortunately, when you get people up on your program, Matt, everybody says management. We've got the group, and as Shane says, they've got a smattering of people that have been involved, with a mining project somewhere in the world, but they haven't built anything from scratch. And so there was this. I've got to say, there was this heap leach panel on another show, not yours, Matt, just recently. And there were 3 companies that were represented in that, and we weren't asked to be there. I mean, we're the only guys, and out of those 3 companies, we're the only guys that have built 2 in the last 15 years from scratch. Now, it was a great show, it was a great presentation, but once again, it just demonstrates, and particularly in run-of-mine gold oxide heap leaching, which is not common at all anywhere in the world, there is a lack of experience, and good underground operators, once again, going back to my career, it's 40 years ago, Kalgoorlie underground. I mean, those guys that were involved in those mines back then in the 80s have all left, So now Kalgoorlie in the Gold Mile is a big pit, right? So all those skills have disappeared. So, admittedly, there's other underground gold mines in and around the goldfields, but there's definitely been a drain of good quality and hands-on people out of this.
And I would add to that, Matthew, from an investor's perspective, I think it's key when they're looking at projects to understand the people, what they're trying to do. If it's an early stage exploration, it's one set of people and they need to be skilled at that. But if it's running projects into operation, it's a different skill set and definitely need experience. In my experience, I've done this a number of different times. There's so many challenges that come up, and you need to be able to make those decisions. And sometimes they don't work out, sometimes they do. But you've just got to make those decisions, and that comes from experience. And when you've worked on a company or a large company or a big mine or a consult, you don't get used to making those decisions. There's 3 layers to be decided, and there's a committee, and there's 10 layers of discussion. And when you're running a lean team, you just have to make those decisions and trust that you know what you're doing and bring your team on. And that takes a bit of time to gain it. Like when I was younger, I worked with those guys in their 70s now, and I learned from them. But young people are not doing that anymore. They want to stay in the Vancouvers and the Torontos of the world and drink their Starbucks. The only way you learn is go out on the sites and spend I spent 15 years out on sites around the world, and that's how I learned. And it's not true I'm anything special. It was just beaten into me, Matthew. Basically, it was just beaten into me. It wasn't called mentorship in those days, Matthew, for sure.
Well, I think the phrase is success has many fathers, but failure is an orphan. In that instance, couldn't be truer. But look, I like what you're saying, because if I speak to some of the big financing names, guys who've made money in this space, they always point to it's all about the management team. But it's quite easy for, I think, some retail investors to kind of dismiss that and just go, yeah, we get it, or not drill down and say, when you say you built something, you were in the room at the same time, or you read about it. I mean, let's talk about that. So I think it really needs to be interrogated. And I think if you're investing into a company, you really need to interrogate what that means. Ask and challenge the management team to kind of prove and show me, don't tell me kind of scenario. But if I given what you're saying with regards to people, etc., what are the things that they get wrong? Like, they can be very articulate and they can be very aggressive and certain about in their statements, but what do they get wrong?
Who gets wrong?
The management teams that claim to be able to kind of build and stuff. Because I'm doing from an investor's point of view, is like, right, as an investor, I want to know what to look out for, what to kind of call out in my management teams, and challenge them before they get it wrong. So what are the things that they tend to get wrong?
All these junior companies have the same script, right? If you look at all their presentations, they start off with management, experience, blah, 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 right? It's a song sheet, a hymn sheet, or whatever you want to call it. So no, you as an investor, and investors do this, but you gotta know who Shane Williams is and who Alex Black is and who the team players are that are being put in front of you as being this magical team that is going to take your money and put it into the ground and turn it into value. Now, in the case of Shane, I mean, he coming in. And West Red Lake Gold was a new business formed around taking over this problem that Pure Gold had put together. But Shane and his team have obviously demonstrated to the market, because they put together $140 million, $150 million to do what they're doing. And you saw the photo, Shane standing there with a gold bar. That's exactly what people want to see. Now, he's got a lot of challenges to deal with, but he delivered a gold bar. He knows how to deliver that bar, and he obviously in his brain has got a plan for how he's going to continually show photos with him holding gold bars, right? For as long as possible. And we're the same. We always talk about our track record and what we did with Rio2, etc. But people have to drill down into that. So when you do talk to a CEO or a corp dev guy or whatever, you got to drill into whether it's real what they're saying about their management and their capability. But also what Shane was talking about, transitioning. Teams have got to be willing to transition. That's the problem with the junior sector, is CEOs don't know when to say, right, I'm done because I'm an explorationist. Now this is for development and I've got to go because I've got to bring in somebody else. Sometimes that happens, but a lot of times it doesn't happen. And so, there's an evolving story with every junior story, but everybody sings from the same hymn sheet. And I find it really funny when management, we've got the best management, we've got the most experienced management, blah, 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 blah. And if everybody had that, what Shane was saying about the brain drain doesn't exist, but it's happened. These guys are just saying it because the guys had 2 years of experience here and 1 year there and 1 year. Oh, we're the best experienced team in the world. So that's it.
Just go on, Shane, go for it.
Go.
No, I was just going to add also around the projects. You know, there's a lot of projects, and you've seen this, Matthew. There's a lot of projects that come around quite a lot of times, you know. So the fact that they are still around, you know, a project should take 3 to 4 years sort of to build roughly, you know, with permitting, financing. Some of them are around 10 years, you know, and that there's some reasons for that, but after a while, investors should know, well, why is that around? Why didn't they go forward? Why didn't they advance it? And then if they can't, that's one area, or if there's some challenges, because most people who are project builders, their aim is to build a project. They want to move as quick as possible, as fast as possible. And if that project is not moving, there's something there that either they can't advance or there's some issues. You know, we've talked about it. There's projects around that come around every 5 years. They're the same projects. You know, they're the same projects, you know.
And if the project doesn't advance, those mine builders will leave because they'll go and find a company that has got a challenge, because all these mine builders are looking for a challenge, right? And that's going to be our challenge as a business, and probably your challenge too, is that, you know, once you get over the hump of building something, etc., and you want to keep your build team together, you got to find another asset, right? And you've got to try and roll into another asset. A guy that did a really good job at doing that many years ago was Clive Johnson with B2.
Gold.
You know, he had a great technical team and he kept acquiring projects, you know, unfortunately in some dodgy jurisdictions lately, but that's the luck of the draw. I mean, Clive's great at keeping a great team together, taking it, you know, and taking that team from project to project to project to project. That's the challenge we have. I think Shane would agree, is that we've got some great teams. He's got a great team, I've got a great team, and now we've got to, you know, try and keep the momentum going despite the fact that we complete the first phase. And in the case of Fenix, the good thing is we've got phase 1 and phase 2. So we do blend into another expansion, but we are, as all companies should be doing, looking at other opportunities, asset acquisitions, other company potential mergers, etc., to put good teams together and to take assets forward. That's what we do.
And most people, Matthew, that my team, if you've gone through a build once from A to B, you don't want to do anything else. That's what you're built for. That's what it's so invigorating and so exciting, and so you couldn't go back and work in the normal, I call it the normal world, the operations world. So those people, as you said, once you get them, are valuable. And you've got to try and hold on to them as much as possible. And they followed the teams. You know, Alex has a team that's followed him a couple of times. You know, once you've done it once, your team will follow you because of that. You know, the challenge is there's not that many projects now, as you say, at those readiness stage. You know, as you said, Alex and our project, and there's not many more than that are going into production in the next couple of years, as we've talked about.
I agree and I disagree. I think there are some projects out there, but there are teams that are not willing to let them go, right? And not willing to understand that putting their project together with another group of projects or team can create quite a bit of value for them. But they, you know, the problem with this industry is people fall in love, right? Technical people fall in love with their project, and you see that at the geological end, and you see that at the development end. So, but it's trying to talk to those people and say, hey, I think you plus us would look spectacular and be really appreciated in the market. But obviously, you know, there's some give and take in doing that, right? From a social perspective. So yeah, I think there are some interesting assets out there. There's a lot coming to the surface because of the gold price, as you probably know, Shane. But you and particularly us know how to look at things and go, yeah, that'll work, you know, and that is not necessarily reliant on a high metal price. We could probably make that work at a pretty modest metal price, and therefore be able to weather any storms that come along,
given what's going on in the world right now with
And I would say, I think that's an important point, Alex, because investors, as you're talking to them, Matthew, they will say that there's far too many junior mining companies out there. There's probably way too many. And so consolidation, a lot of people are talking about it, but the fact nobody's doing it is what you said. Like, we're all talking about it. It needs to happen. It's great for the industry, but there's very few people actually doing it. You know, as you say, it's hard. It's CEOs, it's management teams, the social issues. That's hard to do. You know, again, it's hard to do, and everybody doesn't want to do it. They all have their project. Some of these projects are lifestyle projects. You know, they keep going and they keep going, and it's not best for shareholders, and that needs to happen. It does need to happen for sure.
I think, sorry, just to finish off.
Go for it.
Yeah, sorry, just to finish up. One of the good things I think, personally, that's happening in this business, particularly in the gold business, is that the junior sector is not loved so far, right? And they are finding it difficult to get money. And I think that's one thing that helps promote M&A, because they're not going to be able to get money for the market, so they're probably going to have to put themselves together with somebody who can find the money. And so that to me is a perversely positive thing about the junior sector at the moment. Sorry, Matt, go.
Yeah, no, you made one of the 2 points I was going to make, and so I totally agree with that one, obviously. But the other point is there's a lot of crap out there. That's the problem. And you guys, why I love speaking to you guys off camera is you call it like it is. You've looked at projects and you go, that is never going to work. Us retail investors, us, inexperienced geologists, we're looking at projects with different set of lenses, and we don't see the pain that you see there. And that's why I enjoy these conversations with you. So let me go a little bit further down that rabbit hole.
And just before you do that, Mitch, just a question. I think it's important. Education for investors. You know what I mean? I think that's, retail investors get a bad rap now, short term, in and out and everything. And then they worry then they complain when they lose money in these juniors. I think that education, as you say, getting under the cover, and I know what you guys do with institutions and trying to educate them, that's very important for investors today, because a lot of the investors were trying to get into the mining industry weren't there 15 years ago, 20 years ago. They didn't go through the last boom. They've had the last 10 years of, how would I say, down in the doldrums. Suddenly gold is the new hot thing, and they'll just pounce at whatever's there, and that's a very dangerous way to be. You know what I mean? They need to be able to filter, and that's hard.
They do. There needs to be some kind of defense to their portfolio building for sure. But look, I want to come back to you guys, because what I'm enjoying from this is hearing, that and you guys talking about the things we should look out for, positively and negatively, but ultimately, in your own projects, the buck stops with you. You guys are in charge of your companies. You make the decisions. So when you're getting advice from your teams, or when you're putting your teams together to be able to get advice from them, but it conflicts with your own thinking, how do you kind of make that kind of final call? Because and I'll tell you why I'm asking this question is I had I was going to say pleasure, but it wasn't a pleasure. It was quite annoying actually to speak to a CEO yesterday. This guy one very irritating individual, itself of self-importance and so forth, to clearly drinking the Kool-Aid when it came to his own project. He wasn't seeing what we were seeing. But he was making some pretty big statements. So for you guys, it's hard being sort of at the top of the tree without, I guess, again, like overstating your importance, overstating your ability to make decisions. So how do you treat that decision making with all the data if it's kind of conflicting with your own thinking? How do you resolve that?
Normally, I just stay out of the way is the best way to do it sometimes. I had a project that I did in Quebec for Eldorado. It's a good point for Eldorado and Lamaque project in Quebec, and I did it with a very successful team. And we made an agreement with the guy who was doing the project, and I went down as the VP of operations, and he told me my job is to just keep corporate away. He'll take care of the rest. All I had to do is keep corporate away, and it worked. So sometimes it's empowering the teams. I do find, and I've worked a lot in the industry with big companies, small companies, ego gets into it a lot, and this is the way to do it, and you have to do it one way, and there's no other way to do it in that way. And what's happening, as Alex will tell you, is the young people today don't want that sort of careers. They don't want that sort of. They want to be in companies that are empowering them, living, making them do things together, work as a team. The old way of doing things in the industry, as a baton from the top. This is what you're doing, and that I find in today's young people don't want that. And if you can create organizations, which we've tried to do, and Alex as well, people will be gravitate towards that. They want that empowerment, and they want to be part of that. And I find that very empowering, that you can get people and support them, and they want to learn and grow. And sometimes it's easy, like Alex said, sometimes they don't actually need the skill, because you can teach skill. It's all about attitude, and they want to try and grow, and they want to do the best thing. And the rest of it you can kind of not make up, but you can give them support. You can get them help. I'd rather have anybody with a lot of passion and energy and focus, rather than the most experienced person in the world, because it doesn't work all the time.
Yeah, you mentioned the key word of success for me, and that's empowerment, right? I mean, at the end of the day, if you're a micromanager, you're going to lose. Right. And I saw that in a recent thing that happened to us when Rio2 was taken over by Tahoe Resources, and Tahoe Resources was run by Kevin MacArthur, who came with this stellar reputation of ex-Gold Corp and all this sort of stuff. The guy was useless. He was a micromanager, and nobody in that business could do anything, and consequently, after he got rid of me, and a couple of years later, the company tanked, and Pan American acquired them, and the rest is history. So there was a great example for me of how not to manage a company, is not be like Kevin MacArthur. So, but I've always been like that. I've always been a person that doesn't micromanage, and I'm sure you're the same. But that key word of empowerment, give people the rope, let them run, and if they fall over, help them get up, find out why they fell over, and try and make sure that doesn't happen again, right? And that's what has a good man.
Part of it is in the project development space. It's kind of, if you are micromanaging, you're going to fail, because there's so much to be done. There's so much to be done in parallel. You can't do it. Even if somebody comes in with that attitude, they're going to fail. It's just impossible. You have to empower your people. There's so many different things: permitting, financing, construction. All that has to run in parallel, and one person can't do them. And if they try to, they will fail. That's my experience.
It gets to the point. I don't know if you see this, Shane, but people come to me, and I'm the executive chair now. I'm not even the president and CEO, and I'm trying to push the president and CEO further in front. But they come to me with questions that I can't answer. I've got to say, just give me half an hour or an hour, and I've got to go talk to a couple of people, and I'll come back with the answer, because I don't have all the answers, because my team's got it, right? And so it's different philosophies, and I think obviously Shane's philosophy is very similar to what our philosophy is.
Yeah, we've been lucky at attracting young people in because of that attitude. They worked in big companies. They don't want to work there anymore. They don't want to take that kind of bullshit of that empowerment down. They want to take empowerment, and they've come in, and that's been very successful for us.
So how do you empower these people to make sure that they test their own blind spots? Do you know what I mean? Like, some people, they just charge ahead, head down, blinkers on. This is what I've got to do, without sort of standing back occasionally, because that we've seen enough companies fall over in the last couple of years.
I think you've got to
multiple
be clear.
phases.
I think you've got to be clear with your delivery on what it is. What's the strategy of the business? What is the strategy of that part of the business, this part of the business, whatever part of the business they're in, and be very clear, and obviously, I guess, win their respect for your vision for what you want to have done, and then let them go. Now, not everybody's going to survive, right? I mean, you might empower a management team, but of 10 people, but maybe 8 survive and 2 drop off because they just don't make it. You know, they just can't survive in that sort of system or regime. So yeah, I mean, but you as the top of the tree, you've got to just be very clear about strategy, about resourcing the people. You can say to them, don't worry about money. I'll find the money. You just execute. You execute, I'll find the money. Don't even think about where the next dollar is going to come from, et cetera, et cetera. And so you take a lot of weight off their shoulders by doing things and saying, just focus on this, right? Focus on what you're good at and go for it. Right. That's Shane, I don't know if you...
Yeah, I do find that most people want to do a good job. They want to do best. And there's an approach that I use. I use a different approach. They don't work for me. I work for them. You know what I mean? I find myself as I do the other way around. I don't see as the whole company work for me. I see as I work for them. I help them, empower them. If I can help them empower, we'll all be successful. So I do it that way. I kind of like, I'm, you know, the idea is like Alex was saying. I said, I'm doing certain things that allow them to do their job. You know, it's not they're working for me effectively or the company. I'm working for them effectively. Well, I say that to our management team. The site team here, our management team works for them, not the other way around, because they're trying to help them.
I totally agree. And if you look at our organogram or org chart, or whatever you call it, I'm getting mixed up with Spanish here, but it's very flat, right, at the top. It's not a pyramid. And where companies have pyramids, they're the ones that are going to fail. But yeah, it's a matter of just being very, very clear about things. And what we do is we reinforce that who you're working for are shareholders, right? We reinforce that it's not me, as you say, Shane. You're not working for me. You're working for more than 1,000 people out there that are giving us money, and we have to look after that money. We have to use that money to the best of our ability. So we stress that. And so all of our management team have that clearly in their mind, that they're working for shareholders, not for Alex Black or, you know, for the board or whatever. They're working for the shareholders that are behind them, who have supplied them with the money.
Well, look, here's what, Shane, I'm going to direct this at you first, because given where we've come from with Eurogold, et cetera, it's like when you realize something isn't working, whether it be mine sequencing, plant throughput modeling, you know, you're both at that advanced stage now, but it's like the engine has left the station and it's moving forward. And sometimes, and we know from the previous management team, the Eurogold guys, they will have worked out things were not quite right, not quite as it seemed, but the train had left the station. So they didn't do anything to correct or change course on that, and obviously the inevitable happened. So again, how do you deal with that? Because the pressures of the market were immense on those guys. The funding pressures were immense on those guys. Should they have just stood up and said, no, that we've got to fix that, not just have a workaround, we've got to fix that?
Yeah, I do think that, and that does come from experience. I would say this, that, you know, while we're talking about successful, there is failures as well in project development. It's not all success. And as you do these projects, you fail some, you learn from that. You know what I mean? You learn that we did this wrong and we failed, and here's what we learned. And so through that, there's certain triggers that should trigger some responses. And, you know, if you haven't been through it, if you haven't been through it, you don't know what those are. You know, you think it'll be good, it won't be good, we'll get by. But there are certain triggers that, if you've been through that sort of thing before and failed before, you'll see those. You know, we all like to see as project developers, we've built loads of mines and it's all successful, but there's been some failures, you know, and that's how you learn. It's part of learning, it's part of growing, you know. So that's an important part of it, that you do need to stand up and say, no, this is not right, this is the way it needs to be done, to stand back. Because in that position, okay, they would have said to the market they're down, but the project would have survived. okay, they would have had to refinance and et cetera, but the project would have survived,
But I think as a management team, you have to be honest and transparent, right? Because if you don't, I'm the sort of guy, I sleep pretty well at night, and I don't want to go to, I don't want to have things hanging around. I've got a big problem or whatever that I don't want to tell people about because, there's going to be a big issue and a big reaction to it. You just got to deal with it. I mean, we've been to hell and back in our situation with a an EIA that was rejected when we thought we were just about there. We had to regroup. That was soul searching for everybody in the management team because everybody was looking around and saying, well, what happens now? But we got through it. It took 18 months. We got through it. So, and we messaged as well as we could to the market about what went wrong and what we're doing about it. So, because you just got to, I think, I hope you do, but I just feel that I got to be able to sleep at night and not have things buzzing around my head about issues that are going on that I don't want to tell the market.
Yeah, transparency in the market is very important for sure because you lose credibility. And once you start to lose credibility, then it's a slippery slope for sure on sort of doing that. And, as Alex has done a number of times, once you do one project, shareholders will come back around the second time and the third time because of that. And that's something that Clive is a good example, from Beam of Gold all the way up to B2. He has shareholders who probably were in at Beam of Gold and are still there because of the delivery and the way it's been run, et cetera, et cetera. So you build that long-term momentum. So it is very important to be open and honest and true to the word effectively, and do what you're going to do.
Well, here's one final question for you both, which is if you could poach, steal, one function or one person from another team, another company, who would that be and why? I'm asking for recommendations.
No, I haven't got an answer for that. At the end of the day, we pride ourselves at being able to source and find people that we want in this business and tap them on the shoulder and say, hey, would you like a new challenge? So
okay, well let's go with company. What company do you think is doing things well out there? Who do you respect?
Yes. So I am a big fan of at different stages you're talking about, or just in general?
Whatever. Just say what is it? Like, this is an example of what good looks like.
Yeah. So I'm a big fan of Alamos Gold here in Canada. They've done fantastic things in growing the business and really transforming assets, which are not like the Madsen mine, Island Gold. They bought, it was a failed mine, and they've turned it around. And I'm a big fan of Alamos Gold and in Canada here and what they've done and grown over the last number of years, for sure.
Yeah.
And for me, it has to be Lundin Gold. What a significant turnaround, and I can't believe that Kinross sold that for $250 million to them, however long ago it was, and now they're worth over $10 billion, right? There was a group of guys that wanted to take on the challenge of a country that was difficult, social issues that were difficult, et cetera, and that's what we've been good at. With what we've done in Peru and Chile is not only on executing a technical project, but also the social and other things. So I take my hat off to Lundin Gold. I think despite who they are, obviously very wealthy family behind it, but I think it was just, there was a strategy, a focus. Lucas had a very clear focus for what he wanted to do in Ecuador, and the rest is history.
The other group that I do admire is the K92 group down in a very similar story. They bought a mine from Barrick, that was kind of a failed mine, and they've really turned that around. John and the team, they've really turned that around, become a smashing mine, fantastic, great story again.
Yeah, that's a good story.
Papua New Guinea, folks. Do have a look at John's last act for sure. Well, look, gentlemen, I think we're going to leave it there. There's so many more things I want to talk to you about in terms of, how you well, things like, would you behave differently if it was a private company versus public company, or and what lessons you've learned along the way, but we'll save that for another time. Both of you, thank you very much. Everyone listening, watching, reading this is an example of like two CEO, chairman and CEO that I respect in the space. They're honest as the day is long, and it's possible to get it done. These guys will. So do take a look at their companies. Gentlemen, thank you again.
Thank you very much. Thank you, Matt.